Allison Ostrander is with us, Director, Risk Tolerance, Options Trader Specialist at Simpler Trading. It's great to see you, Allison. I'm happy you're on with us because I'm obsessed with this, what you're looking at with the S&P 500, and you're looking at the Put Butterfly. You have to tell us what's in your mind and how you're playing this out.
And go away. And so seasonality, historically speaking, we've often seen May be a month to the downside as a lot of industrial traders take profits and lock them in. And so I kind of wanted to put on a hedge trade in case we don't get that V-shaped recovery, which I know so many economists and traders are hoping for. And so I'm looking at about 100-point width butterfly, well out of the money. It's about only a $5 cost basis right now. Last I checked it, the 2,600, 2,500, 2,400. You could even bump that up to the 2,700, 2,600, 2,500. But the idea is to give yourself enough of a range that if SPX does start to sell off volatile, like we've certainly seen recently in the past, there's a way to still be able to take advantage of that move and allow for a quick profit while still at the same time keeping your risk very small on the table.
So, I mean, this is, you called it a lotto hedge trade for May, you know, in case there's a pullback. And you're right, there is that old adage, sell in May and go away. And a lot of people do that, particularly after they probably made back some decent money for the month of April. And if they were really smart and got in, you know, on that big sell-off, they did particularly well. But just to understand the risk hedging here, just say it one more time so people understand how you're hedging the risk with this options trade.
Oh, absolutely. So this is a 100-point butterfly. And basically on standard butterflies, you risk the net debit you paid. So I mentioned the cost basis of this butterfly was about $5 last time I looked at it. So basically, if I'm just putting on one contract, that's a $500 capital risk. Because it's a 100-point width spread for the butterfly itself from one leg to the pin strike, I'm looking at roughly a $95 max profit potential or a $9,500 max profit potential just based on the one contract. So you can see there's an excellent risk versus reward. You don't even have to hold on to that for that max profit potential. If we start to see any sort of volatile move going towards 2,600, that butterfly is going to start to increase in value and in turn allow us to take a quick profit off that hedge.
I understand. That was a great explanation. I appreciate you just elaborating on that a little bit. Now, I know you also have your eye on Netflix, which is sitting at around $413. What a run-up it has had as people live home and they've had new subscriptions. You thought there was full penetration in the United States, but somehow everybody's run to Netflix. What are your thoughts on this stock, which really has been running up of late? In 6 months, it's up 42%.
Well, on the long-term charts, both the weekly and monthly, I still actually like Netflix to the upside. I still think there's some bullish strength behind this move and it continuing maybe to new all-time highs. However, right now on the daily chart, it is showing some weakness today. It's not been able to break above its 10-period simple. And it's kind of in consolidation mode. And we've seen that with a lot of symbols after they announce earnings, whether they do good, they don't do good. They oftentimes end up consolidating or starting to pull back to the range that they were trading in prior to the news. So shorter term trades, I'd probably keep them as credit spreads, try and get that theta decay to work in my value. But long term, I still like Netflix to the upside overall. So if you find a nice support level and it looks like it's bouncing, might be a good time to buy back in.
Yeah, and I saw a lot of the analysts have raised their price targets from $475 even up to $540. As I mentioned, it's sitting at $413 today. You look at fundamentals too. I mean, there was always the talk how they had a lot of potential abroad, internationally, that unlike the United States, that everybody has Netflix. Around the world, people are still, you know, finding an interest and can sign up in the next few years. Do you look at that as well, or are you looking more just at the technicals?
I still try and stick to the technicals, but I am certainly looking at those numbers. I think the fact that they've already made a global footprint compared to a lot of the other companies who are still trying to just get things together to launch their streaming platforms here in the U.S., they're well ahead of the game. And if they continue to provide good content like they've done in the past, original showings, as well as favorites that we know and love, I think that subscription is very likely to stay on for people because you can also now start to watch Netflix as you travel, whereas before you couldn't. So if I went over to London, for example, I now still have the flexibility to watch Netflix in my hotel room. So it's I think still going to continue to see a lot of growth to the upside to come.
Yeah. And another name, Google, which came out with its numbers recently, kept digital advertising alive, brought some strength to tech, or at least in people's minds during this pandemic. What are your thoughts on Alphabet Google?
Well, it certainly saw a nice pop to the upside as well. But if you notice for that trading day, even though it's had a nice gap to the upside, the sellers still won at the end of the day, bringing that price back down. So I think a lot of these moves up, these runs up into the earnings announcements have already kind of been priced in. And so I'm still looking at theta decay trades to either hold through the announcement or looking to put them on after the announcement. For example, on Google, it would have been a great opportunity the other day, once they announced, to start looking at some call credit spreads with anticipation it's either going to reverse back down or at least stay choppy in that range after its gap to the upside.
I know you watch a lot of technicals. Did you have any thoughts on any of those IPOs that we saw, or just IPOs in general? I mean, Zoom has taken off. We watched Uber and Lyft. Uber started to move higher. Beyond Meat had a second wave of life again after that secondary offering. I mean, what do you think about some of those types of charts, Allison?
Well, certainly, I think Beyond Meat shows some promise for its run into earnings. Zoom definitely shows it, but I would be a little cautious to hold some of these through their earnings announcements, just because, one, you're never quite sure what happens. But two, as I just mentioned, we've already seen Netflix, Google, Facebook, where it's seen a nice run up into earnings, and some of those did end up getting an additional gap to the upside. But then they've started to stall. They've started to drop back down. And so that's what I would be cautious of around these earnings announcements.
Yeah, that's good advice, because you're right, because even some that had some good numbers even start to sell off. So it's hard to predict what's going on at this time. Allison Ostrander, great conversation. Thank you so much.